We've got a weaker U.S. dollar, tensions in North Korea, and a quieter oil market as the latest OPEC meeting concludes this Tuesday. So what's in store for gold this week? We're joined by U.S. Global Investors CEO Frank Holmes. Frank, welcome back. Good to see you.
It's great to be with you, Daniela.
Well, I'm happy to be back, and I'm happy that you can catch me up on what I've missed here. Let's start with gold. The metal was up after we saw it fall under pressure last week on that solid jobs report. It's now come back down around the 1254 mark, but what's your take on the market right now?
I'm so impressed that gold is doing so well, that in the context that real interest rates on the 10-year are very positive compared to 3 months ago. 5 years also very positive. Only 2-year yields, where you take away the CPI number because CPI fell, are negative. So that's the thing that's holding gold up right now. But what I think is going to happen is we're due for a rally in the dollar. The dollar is down 1.5 standard deviations over 60 trading days. Mathematically, that means you're pushing an 80-some-odd% probability of a rally. Maybe North Korea triggers that. But I think longer term, then would be a great position. The gold sells off, dollar rallies, because lock and load, we're seeing robust demand coming out of China. We're seeing strong demand still out of Turkey. We're seeing, so that love trade is in place, but that fear trade short term is just treacherous.
Well, you're also an oil guy, Frank, and all eyes are on the latest OPEC meeting in Abu Dhabi. Reports are now suggesting Saudi Arabia plans to reduce oil exports. So what does this mean for oil prices, and what could it mean for gold?
Well, I think that oil is range bound between $40 and $60, and it goes above 50, you get a little increment increase in CPI, goes below, it takes it away. I think that technology is so significant, even for cars, that BMW 750 series. I mean, you take a look at technology, is basically double its torque, half the size of the engine, more fuel efficient, and much more horsepower. So technology is showing up everywhere. And I think that that's a thing that's going to hurt oil from taking off to $100 a barrel.
Okay. So what does that mean for the inflation scenario, Frank?
Well, inflation is going to creep up in other places, and like food and soft commodities, regulatory costs, insurance costs. All these things start to really show up in people's just overall monthly existence and cost of doing business. Air flights, they're much more expensive than they were 5 years ago. And I don't see much more of a decline in air tickets. I see nothing but pressure on the upside for them.
All right, and before I let you go, Frank, we've got key inflation data coming out later this week. Is this going to be your touchdown pass?
I think it's very important. We've been talking about this now for several months, that the eyes are focused on CPI. Its range is looking between 180 and 2%, up from 160. I think if anything pushes up to 2%, then I think gold can have a surge and the dollar would then sell off again. But I don't think that's going to happen.
Frank Holmes, thanks so much for joining us today. And thanks for watching this edition of Kitco's Gold Report. We have Todd Bubba Horowitz up next.